Welcome to Crypto EMC. This is a trade for a living channel, and today we're going to be doing some more educational stuff. So in the back there, we've got an order block trader. Now I'm saying that I'm inventing the term order block trader, but in the end of the day, he uses order block supply and demand zones, which is a smart money trading concept to action his trades, look for liquidity pockets, stop hunts, and so forth, to get his trades and his positions in. So that is something interesting that I think everybody should know about, especially if you believe that they're out to get you on your trading. So this is how you see the footprints of the large retail trader and how you can align yourself with his agenda in order to get really good results trading. As a quick brief update for today, just a real quick Bitcoin on the weekly time frame. We have not really changed anything other than that. I'm still thinking that Bitcoin is going to be moving down to 87 for our larger time frame play. If we look at Bitcoin on the daily time frame, guys, there's absolutely nothing saying that this current bearish signal is done. The hopium analysis was that we don't fall below 105, which we basically haven't done that just yet. So I'm still going to be using these lows between 105, where we are right now, and 100, to look for long opportunities for that hopium possibility, saying that Bitcoin could potentially go to 150. You have to trade both sides of the market. As a trader, you're allowed to pick both sides. That's the beauty of it. As of where we are right now, this is the swing sell zone. So this is the area where the sell zone needs to be entered. So we've entered the swing short area. So this is where we're adding to our positions with the stop significantly higher, because remember, there was room for chop. I have on occasion tried to get lower entries in, but I haven't been successful with that. I also tried to scalp some longs, hoping that it was going to drive into higher areas, which just before we went live turned from a successful to an unsuccessful trade. So frustratingly so, this has been a very choppy environment for me, these couple of 4-hour candles as of this week so far. So we'll navigate that and move past that. But now I think it's time that we look at what is an order block. And with me is Wizard. He's been on this channel a while, and he shared a lot of his charts in the past as well. So welcome, Wizard. How are you doing, buddy?
Hello, I'm good, thank you. Yeah, how are you?
I am okay. You've heard my sad little story. Trading has been frustrating, but I think it's something everybody goes through. It's not just a me problem. It's when I align my camera is skew for some reason today. I don't know what's happening there. See, this is how my trading is going. It's like
I feel
other
you
than
on
that,
that.
I'm good, I have to say. And you?
Yeah, I feel you on that. Yeah, it's been a little bit up and down. I think for me, I was slightly annoyed. I got stopped out on some positions on sort of Sunday night by a few dollars that ended up being quite nice positions. Like if I had a stop loss at 31650, and I think we went to 3167 and then went down. Those as you say, it's a tough environment to trade at the minute. There's a lot of volatility on a lot of things, and it feels like certainly if you're trying to swing trade, it's being made very difficult. I think it's a scalper's market, but it's a harder scalper's market than it has been for the last few weeks.
Yeah, you hit here and there and you miss a lot. It is currently sucking liquidity. It's making us pay for the gains we had with the prior trades, so it is definitely, it's punishing me for the success. Which is normal. It's just the way it's supposed to be. And if you guys are frustrated with trading, which one of you guys, give me a 999 in the chat, because I want to know that I'm not alone, and Wizard wants to know that he's not alone either, I would imagine.
Give us some sympathy, some compassion, some resonate with our pain.
Encouragement. You can do it. So yeah, no, this thing is doing weird stuff. Let me just try and fix that.
Yeah, we've got some
StreamYard has
triple
been doing
nines.
some updates, but now everything is working differently. It's like, so there's live, there's Jerry, and Andre is also full nine. There's some words of encouragement. So, Wizard, I'm going to bring up your chart. Let's get into this now. Order blocks.
Yeah.
How do you? Let's start with the first thing. How do you identify an order block from just another bearish candle in a bullish impulse?
I think for me, the ones that I tend to focus on are, I really like the order blocks where you get quite long wicks, particularly on either side. Those are the ones that really stand out to me, because I think for me it then gives a direction of where in the order block I'd be most interested. I think certainly some candle formations inside are also pretty interesting. So I guess the example that I've got on the screen now of positions that I'm currently looking at, the order block that stands out to me is, I really like this one simply because of the way that we've had these candles. As you see, we've got this indicating that that there's a lot of buyers involved in this one, especially
there was a lot of manipulation, holding price in that zone there.
Yeah, and you've got the fair value gap below it that it's not been tested. You've seen the fair value gap above it has provided quite a lot of fuel. So there's been a lot of fuel taken out of this fair value gap. But let's
park it there so that the guys just understand fair value gaps. It's normally 3 candles, guys. So what you will have is one candle with a wick to the upside, then a very strong institutional, I call it normally institutional candle, a very big body candle, if you can maybe hover on the candle that has the gap, followed by another candle, the third candle, with the wicks not overlapping between candle 3 and candle 1. And that little gap where the wicks don't overlap, that typically would be a fair value gap. It's an area where not enough of the traders, the large institutional traders, their positions got filled. Therefore, price will act as a magnet almost to draw price back into that area so that they can fill their price. Do you have any other explanation, or what have I missed there?
I think you've covered it quite well. Yeah, essentially, it's just leaving that imbalance that ultimately you will tend to see price not only revisit, but it will tend to move quite quickly through that area. So you'll tend to have, so for instance, here you can see this previous one, the price moves, judging by these wicks, the price moves very quickly in and out. This one here,
can you zoom in a little bit for the viewers?
And
so you can see the wick there, and you can see the opposing wick with the big body between there.
If I go on to the 3 minute and zoom in a little bit more, we can see coming up to this fair value gap, you can see when it did visit, it only visited it very, very briefly. We were in and out quite quickly. So you can see here is quite interesting because this has previously been a level of resistance, support. And as you can see, this candle here flirting with it. But when we had this fair value gap on the higher time frame, we can see that it basically was in and out of that gap in 20 minutes.
Okay, so to get to the point, you're looking for a good order block with a potential fair value gap that leaves the order block, or that's gets created as price leaves the order block behind. And those would be the high interest order blocks, correct?
Yeah. Especially if it's around sort of quite key areas on higher time frames. So as we can see, this one that I've got here, this order block, we can see that it's previously been a daily high and a daily close. Sits below that 4 hours.
Typically line up really nicely as well with your auction theory numbers, your 4,125, 4,250, 4,375, 4,500, those kind of levels. Those are normally really good negotiation points, correct?
Yeah, Yeah, 100%. Especially on gold, because gold really does like those round numbers. I think sort of as an asset, it tends to gravitate more towards those. And as we can see, the wicks here indicate that this is quite a strong area of liquidity. You can
Now,
also have,
will that be an order block where your cursor is right now, your finger?
I was about to say on the 5 minute, that is an interesting one. It wouldn't, for me, that one's already played out. I think I'd have preferred to see more consolidation because that's an order block in an uptrend. I see that more as quite a nice volume node. However, looking at it, you can see that this has respected this on several occasions. I'm of the persuasion that I think this block has probably been tested to its limit, and that this is probably the time where this will turn into a breaker block. So we'll see this move down. I have actually just been tagged into an entry on 4132. Whether it holds, I don't know, but I'm only looking for a bounce up to here. And I don't think it's going to hold. We'll see. But yeah, essentially looking for those areas. And then when we have, so this, for instance, I really like that we've had this consolidation here, certainly on the 5 minute. I've had a consolidation, manipulation, liquidation, and go. So as we can see there, I've got a marker there. I tend to, when refining my entries, will look at where volume sits within that zone. So if I'll go like that across there, we can see the point of control sits in the middle here at this top end.
And then what does that point of control signify for you? Because then out of this information, how do you formulate your buy zone? Where would you have your invalidation, your stop? Because obviously you need to now enter and have risk management at a reasonable level. So how does that relate to your setup as such?
So my invalidation on this particular trade would be, I'd be looking for a break below this area of consolidation. As you can see, we've had some wicks down. That would be my principal entry. I would layer 2 or 3 entries within this zone. So I'd probably have an entry around here and then an entry on the bottom of these wicks. My invalidation for this top one would be a break below this particular bit here. I'd be a little bit worried because we see the volume drops off quite significantly once you get out of this zone, which indicates that there's probably a little bit of a void around these areas, which you can sort of glimpse by the size of the wicks in this area. Is how I'd tend to play it. But we can see previously we've had some wicks up to these levels. So this is what's catching my eye, is this wick here below here. Is we just have such a sheer volume fall off that for me, if we dip below here, we either sweep these wicks and go, or from here I'd be looking down at the next entry point, which is down here. And if we go back, so from an entry perspective on that, so we see we flick down here. I will check to see if I'm still in, but we can see that this has formed a reaction from here. So whilst we've wicked below, and this is probably where my entry wasn't great on here, I front ran it a little bit, this is an area that I was expecting a reaction, and we have got a reaction to the upside. How strong it'll be, I'm not sure, but we can see it's come back basically perfect clip of there. And I think this is one when I'm journaling, I was a little bit aggressive on my entry on this one, but this zone here, we can see that it's retested this zone, gone, come back down, grabbed a little bit more fuel from here, and as we can see, if I draw a little box here, this is full of liquidity, this zone. As we can see, long wick, long wick, long wick, long wick. So it's grabbed some fuel from here, if that makes sense. I think you're on mute, Rudo. Is it me? I've not got any sound from you.
Hello, can you hear me now?
I can hear you now, yes.
Yeah, I know it's a new StreamYard problem. We had it this morning with Peter as well. So the argument with this this order block that you've got marked out there and the entry, you typically would want to try and drive it all the way to 4142, there where the fair value gap is, or would you try and TP before that?
I'd want to try and get out on the way up. So for me, I'm only really looking for a $4 move. So I'd probably want to be mostly out here, and then at that point it's runner territory, because ultimately I'd be looking at shorts in this area up here. I think certainly looking at this, we can see that we've just got relative equal highs here. So I would expect when we revisit this area up here to come and take this. I'd only be looking for a small move. Like for instance, this trade here, I think this area of support is now going to be further tested. So I'm slightly invalidated. I was hoping for a little push up to here. I think this is moving a little bit deeper into this zone. But ultimately, I'm only really looking for quite small moves. Yeah, look, we're hammering down on open. So that's another thing. I know I've just sort of violated my own rule there, but this is one of those windows where you don't, even if you see a trade that sets up, it's about timing it. And I've timed it a little bit bad, the fact that this has come into New York Open. Typically these imbalances will, you'll see a lot more movement on these imbalances as we move into sort of the second hour of trading in the US. The first hour, you tend to get a lot of these erratic moves, and these will get filled in when we have the open.
So as a tip for you guys, I've got this indicator that I think you all should load. It will help you keep up to date with these market opens, because it's easy to forget. I mean, even a seasoned trader like yourself and me, I do this a lot. I'll enter something and then I would say, you know what? I went about it all wrong. So for the sake of this argument, I'm just going to go to gold real quick and just load the gold chart. But the indicator I want you guys to go and look for that would really help would be this market sessions indicator.
Yeah.
And it's quite nice because it gives you the overlap. It tells you where the liquidity, what do you call it, you Forex guys, when the UK market closes and their liquidity leaves and the US market opens? What do you call it? Because it's now not there at the moment, but was there before the daylight savings?
Yeah, that's a good question. I know it's not the kill zone. It's not the silver bullet zone. I don't think either, is it? No, the crossover times. But yeah, I know what you mean. The market sessions.
But you guys can use this indicator, and it will help you just to kind of go through it. It's nicely thought out, if I have to say. There's many of these dead gap zones. There's many of these kind of areas in the market where sometimes you might have the best intentions and the best setups, but it just bites you purely because it's just the timing. Timing's key here. I think it was who was the trader, the mindset guy. He's passed. The trading in the zone guy. What was his name?
Oh,
Come on, guys. Come on, give me the name.
I've got it.
Those
I've got
watching,
his.
Trading in the Zone. Mark, I
I've got.
think it was Mark, was it?
Yeah, I've got his book.
Oh. See, Trading in the Zone. Let me just Google Trading in the Zone. Come on. What's the
It's Mark
guy's name?
Douglas.
Mark Douglas. I had the name,
Yeah,
Mark Douglas. Okay.
yeah.
He once told a very interesting story in one of his. I when I was still starting out at trading, a friend of me gave me some old videos of him in a seminar talking, but I mean like old stuff. And he was telling about this brilliant technical analyst, but it ended up being a horrible trader. And so he said to the guy while he was coaching, he said to him, "Listen, I think maybe you need to go work. And let's bring up your chart so we can track that gold movement as I explained. So you need to go work for maybe somebody that used to trade on the trading floor, and then from that point onwards, maybe you can learn the other side of the market." And so the guy did, and he went to him, and he basically explained to the now director or the boss at the top now how they were looking at beans. I think the story was talking about soybeans. Our price was not going to go below this low on lunchtime, and this would be the area where you need to buy because it's going to go up, and the technicals points to all these things and the reason why. And the guy said, "Okay, you say won't go below that level," and he said yes. Okay, and he picked up his phone and he phoned down to the floor and he says, "Sell 10 million beans." And it went right through and it just dropped. And that's technical analysis for you in a nutshell. So the mindset is more important than anything other than that. And sometimes you do get stuff wrong and it just drops right through. So there you have a really good example of that. And for me, that was a really good turning point on my journey of mastering trading. And we were just talking. You were just giving me a lot of triple nines, as it's not easy, guys. It's not supposed to be easy.
No.
That's it. Okay, so now that we've fallen through, we're moving back into that interesting zone where we marked out quite earlier today. How are you going to go about that?
So I'm going to. So the key area that I've got my eye on now is this 4119. For me now, I'll be waiting to see how the first half an hour of trading pans out and whether or not we work our way through here or whether this finds a level of support. If we come down and retest more of this and find our way out, I'll then probably be looking for a long in this area. I'm still bullish, despite obviously this bearish sell-off. Ultimately, I'd be looking to find a floor because this move down now has left quite a lot in the way of fair value gaps. So you've obviously got one there that looks primed to be filled. You've got that area there. And where you tend to have these sharp drop-offs in price, where you have the impulse, is you'll have quite a nice back test. So up here, I'd probably be expecting a reaction to the downside once we get up here. As you can see, this is falling through and grabbing some more fuel from this fair value gap. Not trades I'm playing, but notice how when we move into this area with wicks, you'll get moves up as it works its way through. So if you were on a more high frequency strategy, you could also be looking at some of these wicks. I think it'll be interesting to see how the afternoon pans out because it appears the US don't like their gold today. Where we had quite a bullish morning is turning into quite a bearish afternoon. So it'll be interesting to see where we eventually find this level of support. Obviously, we've got this area here of accumulation, this order block that is probably where I have of most interest. If we drop below there, I've got a zone marked out here, but I think it's seeing how it behaves and where it finds a bottom because obviously this is quite a sharp move on open. Like that is.
And then if we're now marking out that fair value gap, do you mind putting a line through that fair value gap there, so that we can just maybe a colorful blue line or something so that it highlights, stands out, so
this one here.
See that. The one, yeah, the one we were discussing prior to this. Yeah, the above that older block.
Oh, this one here.
Yeah.
Or this one.
No. The one
one.
prior to it, at the beginning of the 11th.
Yeah, this one here. So I will we'll make that a nice light blue. There we are.
Okay, so there we've got the fair value gap marked out for you guys. And entering that fair value gap at this moment, how would you now structure your stop? And that would you use the entire previous candle as your invalidation? How would you go about that now? Or is it because it's already shot through? You won't try and catch a falling knife. You'll wait for the next candle after it tested. Or how do you go about it?
Yeah, I want to see it find more of a bottom. I think there's still quite a lot left here to grab, and it feels like, for me anyway, as a trader, there's too much to cover from a risk reward perspective, especially since we're now in this quite significant, I don't want to say downtrend, but we've seen this really sharp sell off, and I think certainly if we look at this, we can see we've had quite a sharp break of structure to the downside. We're still in a bearish change of character. So until we see a level of support and then a bullish break of structure and change of character towards the bullish side, I think I'd still be expecting a little bit lower.
Oh, it's that kind of buy the dip that keeps on dipping moment at this stage.
Yeah.
You kind of want to just see that does not get become a reality for you before you enter on the market. Funny thing now, and this is also something that's maybe interesting, but you've got the 15-minute. Do you mind quickly go to the 5-minute?
Yeah.
And then if you go and have a look at where that fair value gap is situated on the 5-minute. See, now that is now below that order block there. So there's the fair value gap sitting right there. And now you're getting out of the 5-minute fair value gap, a nice reaction. So is this a moment where you would maybe consider switching to a 5-minute? Or rather, would you try and stay on the 15 until the structure forms, then go to the 5-minute?
Yeah, I tend to want to see structure on the 15 before going down to the 5. I think for me, in this stage, until we get to 3 o'clock, I want to just see how the price is playing out. I think it's quite interesting that we've held this 4-hour low. As you can see, we dipped below, grabbed a little bit of fuel. If when we get more towards 3 o'clock, if we've held here, I'll probably try and look for some entries here to maybe get a wick down. But as you can see, we've had quite a strong reaction from this area. If we break up, push through, we have a nice bullish break of structure. It then opens up the possibility to finding areas that you could potentially then find along from. I would tend to try and see where in these big candles we see the volume. So if I was to get an FRVP and go like that over here, so where do we see the volume in this structure? This top of this area here is an interesting zone. A nice little interesting bit there in this price action. Here, this 4317 is where I'd probably want to be taking, if I was taking a position down here. 4137 is an area that I'd expect a little bit of resistance, given the fact that we see this area of volume in this little pocket. And as we can see, this is quite an interesting little pocket of liquidity, because you can, if we go there, you can see you encompass quite a nice wick above the break of structure. So that is probably an area that you'd want to be taking profit if you were to enter down here. Because a break above here then opens up quite a nice break of structure to the upside, but you probably have quite a significant chance of a retracement back down off there.
Why won't you short? Wait for the highs and short the thing down, because it's clearly the momentum.
Yeah.
I'm going to ask you a few stupid questions, but I mean, I need to understand your mindset. Why not?
Yeah.
Why not wait for it to go to that level and hit the short button?
So for me, from a short perspective in this structure, I'd want to see it come and sweep this before I would look for shorts. So this is the area that I had mapped out for potential shorts. I don't know if I'll get my entry, but I had a short entry around here. So the afternoon, I'm expecting, I say expecting, I think this afternoon, once we see New York settle a little bit here, it's finding quite a nice base. I think we have a move up to fill this, sweep this. And this is interesting because you've got relative equal highs. You've got 1, 2, 3, 4 relative equal highs in quite a short succession here with some liquidity above from an order block. So I think the price will naturally gravitate upwards from here. As you can see here, we found quite a nice base on this push up, particularly around this 4-hour low.
Okay, so when we're talking about sweeping, what does that mean? Let's talk, because you've now brought up the term sweeping. Just explain that to the viewers.
Yeah, so essentially I'd be looking for, so where you have a structure like this, you would have quite a lot of stop loss orders here, here, here. And so you've got basically a lot of liquidity will sit here that as a market maker makes sense to take out. So where you have the relative equal highs like here, 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 when price approaches, I'd be looking for a push up through it and back down. You can see it on a little bit of a scale here. In fact, that you had this high, and when it came back on this candle, it went a little bit higher to take out some of these. So essentially, you're looking at a wave. The best way I think to describe it is this wave pattern, and at some point, the liquidity sitting above here, you'll see a little break to take out that liquidity before then it resumes a move either way, is what I'd ideally be looking for.
And then how would you trade that?
So
would you enter in the sweep, hoping that it is a sweep, or would you wait for the sweep to fall past a particular, which would now be a resistance level that would potentially be broken if it isn't or a support level? Would you think that it needs to fall below a critical support before you would enter that?
I'd want to see it move above. I'd want to see it move above before a significant move, just to go into that manipulation element. I think looking at this, if I was to guess from the order book, you probably have quite a lot of people who are looking at this particular level to short, and so when it's coming up here, I would expect it to either come short and go, in which case I've missed the trade. It's gone its way, or I would want to see these people who have their orders here not respected and moved up to here through this order block and then back down, is how I'd see it. So essentially, yeah, it's an interesting way. Certainly this is, I think, is quite interesting how we've had this structure, because we've had this range, we've had this manipulation and liquidation below the range, and now it feels to me that it makes sense for this price to push up back through this range now that we've taken out people on both sides. So as you can see, the price is moving up quite nicely here.
Yeah, it's one of those frustrating things. You had the setup right, but you're not in on the move. It was for some near a stupid reason took you out, and that's it. It's
one of those. It was a very, and this is, look, as we can see, and this is why I obviously broke fundamental rule is why you don't try and trade open or high impact news events, because those candles are really, really vicious. However, we see now these fair value gaps where we said there were imbalances. The market is now moving up to fill these. So down here we're seeing quite a nice move up. I think from a structure perspective, the next point of interest I have is this area here. I think this area here is where it makes sense for an entry for the short side. And you've almost got invalidation, the fact that if this order block here rejects off, if it comes in here and it rejects off, you've then got quite an interesting level of future support.
So if I can quickly switch to my screen, so I kind of marked out the highlights of what it is you're pointing to. So you can see now, there's the imbalance you were talking about with the fair value gap. Price is now rejecting from that level. So although the original buy or the original bias for you was to try and go long here, and that has now failed, if you were to gone short there, you're pretty much almost going to go to that area where when you put the visible volume range profile, I think that target of 124, 125, that would be your TP zone, and that's everything that you're trying to scalp out of this move, correct?
Yeah. Only looking for $4 or $5 moves in, out, try and be out of
in, out with maybe a $0.50 as a stop.
Yeah.
Okay, so a nice 4R, 5R.
I tend to go two or 3 to 1 risk reward ratio, but try and leave 25-33% as a runner.
And then the reason you want a short thing for you guys is there's a nice supply zone or order block that you've got marked on your screen, and it fits the bill because you do have an imbalance. You have the imbalance being tested, but you don't have the order block or the supply zone tested yet. So you can see that every time price was on its way to go there, it didn't quite get there. Maybe that counts. But for the trader, because we don't know what the future holds, that could be a real significant price for that matter. Correct?
Yeah. And of there, I think with that order block, you'd be looking at there'd be quite a lot of orders laid into that. I tend to try and find orders that sit slightly above or below the order blocks in the hope that you get filled by a wick. So from that chart, the bit that gravitates me is just above 4,150. So we take out the order block. So 4,150 to 4,152 is the area that I have.
So what you would typically try and do is if I were to mark out and say that, so you're using the top of that and say, okay, right, that's the area, 4,150 to 4.
Yeah. Is that the Oanda chart? Yeah.
So you would try and target this little area when it pushes through that range, and then from that point, you're kind of buying somebody else's stop, because if you're a no-brain trader, the thing is with trader guys is you're trying to trade what everybody's seeing. So you guys have got the setup now. Everybody's got the setup, and sometimes the market allows everybody to be right, like in this instance, and sometimes, like we've just explained, it will take your stop and then run. So you're trying to look for the most obvious setup would be the 148, that zone. And because it's a shakeout, you would imagine that people would be trying to be as cheap as possible around these highs. And that's why you want to try and enter above.
Yeah.
Okay. Well, there you have it, guys. Going further now from where we are right now, because now we're bouncing between.
Yeah. This is a wild open.
Very wild open. So we're bouncing between the imbalance that you've marked out, and now we fell through this imbalance. Does this now mean, what does it mean for this imbalance? Does this stay? Does it need to do you keep it on your chart? Do you literally delete it and say that's now over?
It's still in the mind, I think, because this is an open move. I think it'll be really interesting when we find a flaw from this. Interestingly, and not annoyingly, my 4119.7 level would have actually been quite a good entry for a bounce. But yeah, I think once we see price start to settle, this whole structure for me feels, I mean, this is manipulation at its finest, and it feels like there's a lot of imbalance in here. Certainly, if we zoom in, you can see you've got a massive fair value gap there. You've got this pocket of liquidity that sits here, this pocket of liquidity that sits here, and this liquidity that sits here. So at some point, when the tide begins to turn, and I don't think I had my order in, and I think the tide is turning quite nicely. I think at some point we see this filled in, and we'll see this structure come and taken out. I'm trying to see if there's a previous example of this. So we can see here, you've probably got quite a nice example of a similar where you've had this quite sharp dump, manipulation, and then you've had that upward move, and it's come and it's filled in this fair value gap, and it's moved very, very quickly through those. So this area here is quite interesting because you can see every time price has visited this particular area, it's moved through very, very quickly. So this is probably a void that at some point price will need to have some consolidation inside of it. Also, now I am getting very annoyed that I didn't have an order for 4119. I've got a feeling, Ruda, this is going to go all the way. Yeah. I took the entry that failed and the entry I had.
If you weren't on the stream, you would have had your order. So the cost of educating. So let's send you some 777s. Good luck for your next trade, because now you're going to be hunting that 4152 stop.
Yeah. And I think where we've had the previous levels, you can now also have them as levels of interest for a potential rejection. So from here, 4132 remains quite an interesting element. The wicks above indicate that there's liquidity there, so it wouldn't surprise me if we go up there. We wick up to 4135 perhaps before I move back down to the downside. It feels to me like now as we get more towards this kill zone, some of these imbalances will get filled. Essentially, the kill zone is there's different characteristics for different kill zones, but the New York kill zone is I don't know what time it is for you over here, but it's the kill zone is a 3 o'clock my time, so 7 minutes. 7 minutes the next hour is where you'll see a lot of these imbalances get filled. You've had the sharp impulse from open, and then you'll see some more regimented price action that comes and fills in some of these gaps. So I think that 4119 is, and that order block is an area that I'll have of interest. I think we've seen the reaction off it. So it screams out to me that potentially we move below, grab a little bit of fuel from below. So maybe sort of 4116-ish is where we may get the reversal. But as we can see, this price is being pushed down quite significantly on open.
Well, we have it, guys. So let's see now. It's pushing it down quite aggressively. And even I myself feel like so FOMO because I didn't enter on any of those imbalances. I mean, this would have been an amazing gold short if you had taken your position, considering that you've got a lot of momentum at this stage. And then your next OB is, what's it, 411? I mean, if it falls to that
here.
level.
This is interesting.
But which it looks like it wants to do. That momentum is very powerful at this stage.
Yeah, 100%. And that's the previous area where we've had this change of character on the impulse. We've yet to have a break of structure or change of character on here, so we're still a little bit bearish, but it feels like price is getting to a certain point. This imbalance here is quite interesting. I think this candle here may push up towards this 4-hour open and come back down, but this is fighting here. This is very, very aggressive price action. I'll see if I can put the sessions on, because I find, and this is I think where is this the one? This is where I think as well, when you come and journal and you have a look at where you're most successful, is there's certain trading sessions that move fairly differently. For gold, my favorite sessions are the London sessions, because you tend to have
the UK Open.
Yeah, UK Open. So you get the back end of Asia, and then the UK Open.
And the nice thing is the Asia liquidity doesn't overlap with the UK Open.
No.
So you don't have this segment where the US opens just as the UK kind of dies off, calls it a day.
Yeah, exactly. So you can see, yeah, I really like the London session. I think the London session, if you're trading gold, is one of the better ones to trade. I find the US one really difficult, and I think that's where a lot of certainly people are trying to get into day trading. And I think you see it the same when you scalp crypto as well. It's by far the hardest session to trade out of the three. Just because the sheer amount of volume, but also that there's more manipulation than you get in some of the other markets. As we can see here, this is now moving up and beginning to find a bit of a footing as we enter the kill zone. It'll be interesting to see how many of these get filled on the way back up. But again, principle, we were right. You have this range here, a manipulation below, and then I think we push back up into the range and manipulate above. But that level was pretty good on that order block. We've seen quite a nice positive reaction. If you'd entered here, you'd have been looking to take profit around here. So it's been quite a nice move. But these candles are very aggressive. They're very aggressive, these candles on open. Yeah. Do you find on the trading sessions, are there any particular times or sessions that you find your best or most effective?
For me, I actually have to say when we hit the UK lunch hour. So for me, in our winters, we aligned with you guys, and then when it's summer this time round, it's like 2 hours. It jumps, so it's frustrating in a way, these time zone shifts. But for me, the UK in the middle of the range, that's typically, this is now Bitcoin. This is typically when everybody kind of buggers off. Yeah. And then the market has this big move, and then the US always enters with either a massive shakeout, then the continuation of the trend. And funny enough, for Bitcoin, the confluence now, we've been tracking this move. I'm just going to switch off market sessions for everybody. We've been tracking this move, and I'm looking to go short pretty soon. So what we identified is when you have your low, your high, and you have an RSI that goes from the one to the other condition, being oversold to overbought, I would typically label that as wave one impulse. And then this would be a correction. Now, correction typically does not take longer, or should not take longer, than the impulse by Gann standards. But let's give it the benefit of the doubt and say, well, we're correcting to the upside. We maybe not trending 5 ways, we're correcting 5 ways to the upside, which means that then makes sense that this is the potential possibility. Applying the Gann fan then, and using this setup, the speed resistance fan, but using the 38.2, typically what I'll do is I'll keep an eye on that on all the highs until we break out. And Gareth Soloway actually quoted this. This is the scene of the crime. And price will go and revisit the scene of the crime. And funny enough, if you zoom into that, you can see that there was resistance, turned to support, held as support, and now lost again. So from a support resistance kind of point of view, you've got that same setup playing out. And then if you look at this from the order block point of view, we would have right there, although it's not blue, you would wanted it to be blue, but I mean, it is a doji. So $1 here and there, I'll probably find an exchange that has that as blue. You would have that as a real good supply zone or an order block. And what makes it really powerful is that you've got an imbalance or your fair value gap sitting right below that. So price would potentially push up into that area before it rejects down further for the Bitcoin short using your way. You must tell me if I'm going off pace here or off book. Yeah. And the way that I would layer this in as well is saying what, looking at the RSI, we're pushing higher than this pivot here, which will give us, by the time we get there, hidden bearish divergence, confirming the continuation of the bearish trend, and therefore the most plausible entry or the most probable entry for the continuation to a lower low. That's how I would go about it. So that's how I would actually trade this, using the fact that the US always gives you we call it in our Discord, we call it the 4 p.m. fuckery, which now is 5 p.m.
Yeah, it's yeah, I agree, and I think we're heading towards now as we enter that kill zone. You tend to have the price again. Yeah, so the price will tend to move. So one of the characteristics of the New York kill zone is that you'll move, either continue a new trend that's developed, or you've manipulated out and you'll move back towards the range that you had set in London. I think as we see now, waiting for it to settle a little bit, it feels to me, I may be wrong here, but it feels to me like this is finding a bottom, and at some point will head back into this London range. So the London range is here. How far into the range it goes, I don't know, but you've got quite a lot of imbalances. You can see this candle here that we said would reject off this order block has. I'm still very much interested in longs in this area. I think we move back down, grab a little bit here, and then we potentially move up to fill some of these imbalances. But that is a wacky bit of price action.
With the new price action, if you were to go to a 15-minute, would this cluster of action not create a new order block?
You technically have. So you've got one here. I don't like the size of this wick. Is the only thing. I think we'll see at some point a retest of here. Ultimately, this is quite positive that we're seeing certainly this candle here on the 15-minute, because that adds some volume and consolidation into what was an area that previously we've not had anything. So here you see the same, because it's wick. This now on the 15-minute has given you some volume inside this area to almost sort of mitigate this. I think we see this move down and this wick here potentially tested, but you do have, certainly the body here has formed an interesting block.
And if you maybe go to the but it's probably not enough time to go to the 1 hour yet. It's probably still an open candle.
Yeah. So if we go to the 1 hour.
Yeah, it's nothing at this stage. No. So it doesn't necessarily mean that we're going to create an order block now.
No. What does it look like on the first?
It still makes that 4111 a significant one, because although you have it on the 5-minute, and the rule books typically say if you can have it on the 1 hour, the 4 hour, and then on the 5-minute, those would typically be a really strong order block as opposed to one that's just on a 5-minute time frame, but as part of a bigger move on the 4 hour. So if you go back to the 1 hour time frame, you will see the significance of that, and it brings us full circle back to why that was the best one that you were looking at, because you can see there on the 1 hour, it's neatly formed there. And then when we go into the smaller time frames, there's confluence on that time zone. So if you were a swing trader, that's where you would wait. Correct.
Yeah, you patiently wait, and obviously you've got a lot of consolidation in that area. This here is quite interesting. You can see prices battling here. I think this opens up some interesting opportunities. If you move up, you have the possibility that you may say, I want to short from here. Or we move down and you'll say, I want to long from here. This here is what I would call a no trade zone. Like, this here is not where you want to be having. You don't really want to be having any orders set in this zone. Just from
because of too much chop. What would be
It's a big liquidity zone. I think certainly you can see that it's hungry for this zone to eat up, which is why here, when I had my long from here, I didn't want you wouldn't want to have a stop loss in this zone at all.
Because it's like a no-brainer area where anybody that would trying to get that long there, this is where they would be hiding. So it's kind of now. Okay, makes sense.
We're chewing through here, and this is, I think, certainly from a trading perspective, this is one of those times where it makes sense to sit on your hands and wait for the right opportunity. And it feels to me, looking at the way this price action is playing out, a lot of people are also doing the same. It's where will this find a footing? I think it's interesting. Certainly watching it play out on this 15-minute candle is quite interesting, because you can see that there's buy pressure, but there's not enough to negate the sell pressure. But the momentum's slowing from open. So at some point, you'd expect this to find a nice local bottom and move back into that London range.
Well, there you have it, guys. Now we need to wait. That's the part of trading is things, not using them to press buttons all the time.
Yeah,
I see Pramim is giving you a nice compliment, and he's also pointing out to the correlation between the two theories, which is sometimes the thing. There's, as the saying goes, many ways to skin a cat.
Yeah.
Go for
everyone looks at things differently. Everyone looks at things differently, but ultimately you're looking for the same thing. You're essentially looking for where liquidity lies and how price will react at different levels, whether that be you do that through support resistance, whether you do that through things like liquidity heat maps, you look through that from fair value gaps and smart money concepts, or you look through it through sort of more longer term stuff like an Elliott wave theory. You're essentially just trying to identify the same thing. What is the trend and where is the liquidity?
And this boils down to, if you were to bring this down to one sentence, you're not trying to trade what you're seeing. You're trying to trade what everybody is seeing and where they will get stopped out.
Yeah.
That's the whole idea. So as a trader, our job is not to look at the same articles as everybody else, the same juice, and say it's going to go to the moon, and then place your position, and then let's hope. Your job is to say, well, if everybody's going to do that, and the rule is that 90% of everybody needs to lose, so the most common position where you would think that would work for you would be the area that's going to be the moving average for everybody else. So just try and buy where you would get invalidated. That brings it back down. And the order blocks kind of points that out nicely, because now you can see where the big deep footprints are. So that one at 411, that was a whale buying, big footprint. They could control price on a 1 hour time frame. How much liquidity is needed for that? Was it
I think you need more liquidity than the human mind can comprehend. Yeah, it's crazy. I think, as I said before on some of the other stuff, if we look on the daily, just to try and put some perspective, that there on a daily candle is probably close to $1 trillion of upward pressure. Like this, the amount of money required to move this chart is beyond the actual capability, especially if you come up from a crypto background. Is that candle is essentially the entirety of Bitcoin's market cap.
That's a lot.
Yeah.
That's a lot, guy.
It is crazy. But as you can see, we've had this really nice, certainly if we zoom out, where I think when we last spoke about gold and we were dumping here and we were wondering when it would find a bottom, is we've had this liquidation wick and it's found this new area of consolidation inside this fair value gap. On a daily fair value gap, we can see that it came and filled this in and is moving up. That's actually, yesterday's candle was crazy on gold. Like,
which actually then brings you back to that idea. That's why you would probably favor the long, trying to find the bottom, as opposed to the short. Because, I mean, you've got that fair value gap tested. So what does it mean? Price is going to want to try and go make a new all-time high realistically, looking at it from this point of view.
We've come down, we've liquidated, consolidated, and certainly from a wave price action, we can see we've basically
and we had a massive move, big strong candle pointing out there. So it's fair to assume that for today is maybe going to be a little bit of choppy as the market sorts itself out, but then the moves are going to want to continue.
And as you can see, this, you've got a nice imbalance here that I think at some point will get tested. Ultimately, though, I think on gold, if you zoom out, it's a fairly, certainly even if we go on the weekly, like that as a trend is not one that you'd want to try and get in the way of. It is just, I've seen some crazy numbers as well floated around for gold, and it depends on sort of what your view is. I need to get off that. From a macro view is, and how I see some of it playing out is I think that a lot of it is a displacement of the bond market. So the US treasuries, certainly China has been offloading quite a lot of US treasuries and been rolling it into gold. I think that's something that we see continue on, particularly as the dollar begins to weaken. I know we're having a little push up on the DXY, but I'm expecting that to flush quite sharply back down at some point. I think we're seeing that with some of the US price action. It's a bit scary.
It is.
It's certainly if I put my macroeconomist hat on, we're seeing a lot of things play out that previously we haven't seen, and the unknown is probably the scariest thing from an economic point of view, because you're then theories and textbooks. As you can see, the gilt yields on the US, where they've previously been, I think when I was last on, we were talking about them being at support. They've bounced off support now, and I wouldn't be surprised if at some point we see these begin to rerun some of these highs. And up here is not good. Up here isn't good. Down here wasn't good. But
continue your thought.
I was just going to say, down here, when it was getting some support, wasn't particularly good if you were liking Bitcoin, gold, stocks, because this was money that had been rotating out. I think we're now seeing some selling in this area, pushing the yield up. Ultimately, this is quite scary, particularly some of this. The shorter term ones, the year,
massive. massive gaps. That's it.
Yeah. Yeah.
That needs to scare the hell out of you.
Yeah. These are not. This is not the way that charts are meant to look.
It's not healthy.
Like these
That's
are not
definitely
healthy
not healthy.
charts. These are not healthy charts. Gold is not the sign of a healthy chart. I mean, the UK's looks fairly grim as well. And I think the one that I always quite like looking at is, I think, as a nice precursor, is Japan's always a nice one to look at, because I think Japan tends to front run what is happening to the rest of the world. Certainly from an economic point of view, Japan went through what a lot of the Western world is currently going through years ago. That era of low growth, high inflation, and it's almost sort of that ghost of Christmas past. And you see it in some of the indices. The Nikkei is, again, eerily similar to that of the S&P dip. I'm personally expecting a liquidation on the S&P at some point. That's my Bitcoin chart, but this is what I've got marked out for the S&P. Is it wouldn't surprise me
Just
if
bring your chart over. We're missing, thanks.
There we are. This is what I've got marked out for the S&P. So I'm expecting at some point a grab here, and this would correlate. This would be about, I think it's about 10% move down from the top. 10% from all-time high.
Now, and something that could trigger something like that would be the government shutdown being on again, because it's going to create that false sense of, okay, it's okay now. And then probably that will give them more exit liquidity to pile up on their shorts.
Yeah, I think it'll be used. I think the government shutdown resolution will be used as a sell event, simply because a lot of the price action has already been factored into it. News events are interesting because essentially they tend to just be excuses for market makers to move the price to where it needs to go in a more expedited manner. I also quite like the housery of them using that event. You see it with rate cuts. Is rate cuts when we've had that rate cut and you had the bullish move before the actual bearish retracement.
So buy the rumor, sell the event.
Yeah, and I think we see a little bit of this from certainly from the shutdown, because we had the news of the deal pushed up equities yesterday. We're seeing a little bit of a retracement today, although today isn't a it's like a half holiday, I think, in the US, isn't it?
Correct.
Yeah. So you're not getting the full freight.
So we'll see what tomorrow brings. It's going to be an interesting one. What we have for you guys, though, is for Thursday, there's going to be Twitter Spaces starting pretty much now, this time where we're at right now. And I've got Benny Lingham. He was a Dragon's Den investor in South Africa. So it's our version of your Dragon's Den in the UK.
Nice.
And so we're going to discuss the US shutdown. He's in LA at this stage. He's going to be there. So he's going to join us early morning, and we're going to be looking at the government shutdown and speculating on that. He's really good at this. On, as he says on his own Twitter page, he's an armchair economist, just like us. But the guy knows his stuff. So we have him, and he's going to be coming in. He's going to be shedding some light. So make sure to tune into that and follow our socials. Wizard of Alt down below, scrolling below, and so forth. And go and follow Willie. So when we're live, you can catch everything from him as well. The guy knows his stuff. More than he's got a reputation. We're the armchair guys. I don't call him an armchair, but in any case, he's going to be here as well, and then we're going to be looking at that for you guys. So I think that's going to be an interesting take, because he's going to break it down for us from his point of view and how this could potentially impact the market, the crypto market, and everything forward for us. So that's going to be an interesting stream. Wizard, closing remarks for you, my friend. I'm going to bring back your screen. We've got gold there going. What would be your closing remarks on this?
I think
Wait for 411 and then buy?
I think so. Although I will say, looking at equities, it is not a particularly pretty day in the markets in the US. We've seen quite a lot of pullback on the Mag 7. It feels to me like we're probably going to see a red day just as gold ticks into the red. It's a day I think
as well does look red.
Yeah, it's it looks like it's a bearish day. Be interesting to see how the afternoon of the US plays out because you may get a different tune. But yeah, as you can see here, the imbalance was the play, Rudo.
It was. If only we knew.
Yeah.
If only we had that crystal ball indicator that would tell you exactly that this is the one.
Forget the other short here. It's it'll be interesting. I think when we do see this reverse, it's left quite a lot of imbalances on the way up. So there's some nice zones to move on the way up.
Play off. We created just a one just now again.
Yeah.
At 4118.
Yeah. I'd probably hold my bid at 4111 in case anyone's looking at it because I'd want to see this find a level of support first. Because ultimately this is still a falling knife. It's not pretty, is it? It's not pretty. It's not a pretty move. This may be but as we had the bullish day yesterday, this is a case of seeing where it goes. A long-term trend is bullish. Intraday, I'd want to find this. I want to see this find a bottom and a level of support before I play it. But it gives you the opportunity to look for shorts. I think some of these areas that we've marked out can potentially play for shorts. So if you had a push back up, 4119 might be an interesting area to short, the same way that 4132 would have been quite a good level to short from.
Yeah, like I always say, good buy zone, if it fails, turns into a good sell zone.
Oh, someone is offloading a lot of gold.
Yes, even on the 4 hour. This is looking horrendous.
This is billions and billions and billions of dollars being offloaded. Money that. Yeah, look at that.
That 4 hours looking horrendous. 4-hour
candle. Yeah, if only we got our entry at 4152, that would have been a beautiful short down. It's
winning bucks.
Yeah, exactly. And this is why you always trade with a nice tight stop loss and have your risk management on point, because ultimately, if you have a 3-to-1 risk reward ratio, you only have to be right 33% of the time.
Yes, that's the truth. And let statistics play it out for you. Simple as that.
That is a brutal candle.
Wizard, thanks so much, buddy.
Thank you very much.
Guys, give him a follow. Thanks so much for showing us your system, how you go about trading, how you go about identifying these blocks, the best time zone to trade, which is UK Open. Stay away from the US unless you can get a position in the UK Open. That's in good profit. Then maybe the US might just push that one further for you if ever this is a good day for that example.
US is the hardest one to trade. US is the hardest one to trade.
There you have it. Thanks so much, guys. Thanks, Wizard. Appreciate it. Have a lovely day. Cheers.